Hi, I'm Max Kaiser. This is the Kaiser Report. Lots to get to. Stacy.
Max, you need the double-fisted money printer guns today because we're looking at a quote from Ben Franklin from how many hundreds of years ago? It was 200 and something years ago, 250 years ago. He was right. He predicted it. He saw today. He saw this day today. Because he said, when the people find that they can vote themselves money, that will herald the end of the republic. Boy, have they figured out that they too can get in this free money game.
I mean, this is an incredible quote from Ben Franklin, kind of one of the architects of America. And he told us how it was going to end. When you can vote for free money, the republic is done. And this is what just happened in the 2020 election. People voted for free money, and now it's officially, per Ben Franklin, it's done. It's done. It's done. It's done. It no longer exists.
Right. Well, that is kind of a reflection, a TV presenter reflection of this image. This was from the January 5th runoff election in Georgia. Where's my money? Where's my money? Where's my money? Where's my money? This is new. Mitch McConnell's Louisville home was vandalized following his blockage of the $2,000 stimulus checks. Messages like, where's my money, and other expletives were written across the front door. McConnell called the move a radical tantrum. On the one hand, as we've been covering here, the bankers since 2008 have been getting free credit. They haven't had free money. This is money. You know, this is actual cash money that the Treasury, that the government, the people of America finance and print. But they've been getting credit. And obviously, we've seen the Cantillon effect. We've seen this explosion in the wealth gap in particular. Now people are starting to cotton on that they need free money too, especially since the economy has been shut down. They're asking for free money and they want 2,000. That was the message. They want more money. Give us more money. Where's my money?
Well, that's an important distinction. The free credit that's given to the cantillionaires allows them to buy stuff like chateaus or fine art or Ming vases for very little, if not zero cost, because that free credit doesn't have any interest rate attached to it. And they buy this stuff and the price of that asset goes up, fueled by the free credit. Everyone else in America, they've got a credit card, which is 16, 17, 18%. They've got to go to the payday lending shop, which is 200, 300, 2,000%. It's what I call interest rate apartheid. It causes the cantillionaires. It causes the wealth and income gap. Now the government is in a quandary. They have to print actual money and distribute it to the peasants of America. Let's be honest, that's what we're talking about. And the peasants are upset because they've had their country stolen from them. So now we've got a genuine peasant revolt, like we had in France, or we had the Bolshevik Revolution. We've had many revolutions over the centuries, and now America finally is having its first major peasant revolution.
The bizarre thing, of course, is it's come about 20, 25 years too late. The cantillionaires already long ago shipped away your manufacturing capacity. So when that money printing comes and there's no goods or services being produced with any of it, that's a recipe for total chaos. We already see it. Like the markets, the ones that are allowed to trade freely, gold markets are not allowed to trade freely because, of course, the psychological warfare from the central banks, and that's what they engage in, right? That's what Fed speak is. They try to maintain your animal spirits. They want to make sure that people don't save too much because that undermines their authority and their system. But what the free markets that have been trading are the commodity markets. They're too massive, like all of the agricultural goods, the base metals, the industrial metals, all that sort of stuff. They've been rocketing. But of course, Bitcoin as well just has been going berserk because also like the Wall Street and institutional investors, they're getting into it. And they're the ones that finance the political system, so they know it's going. This is them like front running what they know has to come because those peasants, if they don't want the peasants storming Wall Street, they know it's coming, but they're protecting themselves, and that's by going into Bitcoin. So as soon as there was the last county left in Georgia, and they had a weird confusion about how many votes were actually left outstanding. And then they said they're going to shut down for the night and they're coming back in the morning. And what happened is Bitcoin went like this. It like, whoosh, like it immediately recognized that, the Democrats were going to have enough authority and power in the Senate to then pass the $7 trillion stimulus bill that the Biden administration wants. So it was immediately responding to it, whereas gold didn't. Gold actually kind of fell.
Right. There's no price discovery in gold, right? We now know, if you look at the charts, for every kind of move in money market paper derivative creation, there is a move in Bitcoin, but it doesn't reflect in gold because that money market derivative creation is used to create artificial sell orders on gold. And that's been a conspiracy theory for a while until Jamie Dimon and JP Morgan just paid $1 billion fine, having this been now shown to be true, that they were manipulating the gold price in exactly the manner I just described and have been saying for 10 years. And they paid that $1 billion fine by, guess what? Manipulating the gold price. Oh, wow, that's a pretty strong enforcement agency you got there over at the FinCEN and SEC. Good job, Eric Holder. Remember him? He said that prosecuting bankers was amoral.
Now the people know that they could ask, where's my money? And they finally are asking for that. And what does Chuck Schumer say? Well, Schumer says $2,000 checks will be among first agenda items when Warnock and Ossoff are sworn in Georgia. So they take the Senate, and then the first thing they're going to start doing is sending out money. Of course, they're going to need that, right? Because the markets can front run this. The markets front run the peasants. The people are going to be happy with the $2,000, but they're going to pay more than that in the inflation because the speculator, investor, Wall Street class already knows that money's coming in. They've already collateralized it. They know, okay, they're going to have $2,000 more to spend. We know where they spent it so far. We're going to front run that and charge them more.
Right. The 2 years, $2,000. And by the way, your purchasing power just dropped more than $2,000. So we took money away from you. And the Wall Street crowd and Bitcoiners are front running this for sure. And this is an amazing moment in history when the money spigots are used to prop up a falling regime. So, I look at those photos coming out of Venezuela of the Bolivar littering the street, like we've littered the set with this paper money. And that literally is coming to America. Weimar Republic, where they were wallpapering their homes with the German currency at that era. That's literally coming to the U.S. They are going to debase the value of the dollar to zero, and the dollar goes the way of every single fiat money, paper money regime of the past 300 years. They've all gone to zero, and the U.S. dollar is going to zero, or, in the case of one of those currencies, it lost 99.9% of its purchasing power, effectively zero.
If the dollar goes to zero, and we have more about that in the second half, all currencies, the whole fiat grid, like the dollar is the global reserve currency. So it affects everybody. It won't be easy, but everybody is front running it by going into commodities, by buying things. Who knows how much China over the past decade or two has been stockpiling huge amounts of resources ready for this. We don't know how much of those resources that they import they consume or if they're just storing it. Chris Hayes, mainstream media, cable news, corporate guy, said, vote for us and we will give you money is the apocalyptic nightmare that conservatives of all stripes have been terrified of since the dawn of democracy, which is a good, he's cheering it, obviously. It's like, haha, you have to give the people money. And it's a great juxtaposition to that Ben Franklin quote. Most of these guys like Chris Hayes and Rachel Maddow think they're like way more clever than the likes of Ben Franklin, right? But he was probably the most clever of all of the founding fathers. And, that notion of a republic or a democracy, that was actually debated and discussed whether or not, you want a democracy or a republic, i.e. like a protocol or rules that nobody could violate, even if they have the majority of the population. Yeah, that's a very important distinction. With this money printing now coming along, what we're going to see finally is inflation for real. So when you print credit,
has been going on since Alan Greenspan in the mid-1980s. You have this bifurcation in the economy where the central bank can claim that there's deflation because they're printing debt. And debt, by definition, you could say is deflationary. So they're printing debt. So yeah, it's deflation. But now they've come to the point of the peasant uprising where they're going to start printing cash, not debt. So now prices for food and energy are going to go up 20, 30, 40% in the next 18 to 24 months. So now you're on lockdown. You're not getting a rise in income of 20%, 30%. Everything's going to go up by 30%. So the peasant revolt's starting to get more. I just want to remind people that this is not the way it was supposed to be. In the Constitution, they specifically say money is gold and silver.
They in particular say the states, the individual states. So North Carolina cannot issue credit other than in gold and silver because the United States itself, the national nation, the federal government did not want to go to war because North Carolina owed money to France, say. So that was part of why they said that. But yeah, the federal government could issue the credit, and they're going to do that now. They're going to start issuing more money. And so whether or not the system can sustain, obviously Biden is the sort of guy that will work with the IMF and UN, unlike Trump. He was definitely against those people, and they were signaling what they want. They told us during the election cycle, they said they want a new Bretton Woods. So that could be something that they're on board with, and that's perhaps like their plan. So who knows?
Yeah, to be clear, with Bitcoin, I can transact with you and nothing can stop it. It's uncensorable, it's unconfiscatable, it's protected by an encrypted shield. And that encrypted shield cannot be pierced by any government, any group of governments, or any computer. And so we live in this encrypted, shielded environment called Bitcoin that is outside of the nation state. So nation state, we don't care if you go away, and you should go away because you've outlived your usefulness. You too, central banks.
Time to go to the second half.
Let's do it. Welcome back to the Kaiser Report. I'm Max Kaiser. Time now to turn to Alistair McLeod of goldmoney.com. Alistair, welcome back.
Thank you for asking me, Max.
A lot of people ask me why I'm so smart. And the reason is I read Alistair McLeod over there at goldmoney.com. You just wrote the following. The U.S. dollar is probably not even going to make it to its 50th birthday in August. It looks like you've got a very bearish outlook on the U.S. dollar. Alistair, fill us in. What's happening?
Basically, I'm afraid the U.S. dollar is already in hyperinflation. Now, that's my definition of hyperinflation, which is as follows. When the money printing goes at such a rate that it is really beginning to take over the finances of the country, and that rate of printing will accelerate because it cannot be stopped, then by definition, we are in hyperinflation. If you look at the second half of fiscal 2020, that's really from March to September last year, government finances were paid more by monetary inflation than by tax revenues. So already you can see how dependent US spending has become on financing it through inflation. Now that was last year. This coming year, we haven't even started dealing with the money printing that's going to be from the second wave, on top of all the corporate failures from the first wave, the contraction of bank credit, that is going to become a real issue. You have supply chain disruption, which we've seen. I mean, that's a continuing story with containers all in the wrong places around the Pacific Rim. There is absolutely no way that the Fed can avoid having to print at an accelerating rate. So by that definition, we are already in hyperinflation.
Let me just repeat a number there that you're talking about. So you're saying that the tax revenues collected by the U.S., I believe it's in the $3 to $3.5 trillion range, is less than the amount of money they printed to cover their operating expenses. So they are now entirely dependent to cover expenses on printing money, and the tax revenues at this point don't cover it, right?
Yeah, I'm talking about the second half of last year. Okay. I mean, the original deficit forecast for March to September was around about $537 billion. Now, after the fall in revenues and the increase in outlays, that meant that the estimated second half deficit rose from that 537 billion to 2,774 billion. The QE between March and September was 1,467 billion, which was it's just over 1 times the funding, if you like, of all that deficit. It's about 1.12 times. So, with the American government now dependent on monetary printing to pay its bills, there is no way back for it. I mean, unless somehow someone has a mandate, like Mr. Biden, to just stand back and let the whole system crash. I don't really believe that that is the first option. I believe that the US government's first option will be to try and keep the show on the road. And that means accelerating money printing and the destruction of the dollar.
So a lot of this money printing and the effects in terms of inflation has been hidden or masked by the fact that, number one, the government doesn't report on the actual prices that are inflating. Let me give you an example here. Michael Saylor over at MicroStrategy just bought $1.5 billion worth of Bitcoin. And he keeps saying that, look, my balance sheet's shrinking at 20% a year due to money printing, and that's the real inflation rate. He said the government number is false. Do you agree with that?
I agree entirely with that. And indeed, the reason that Bitcoin and Ether and other similar leading cryptocurrencies have been so spectacular is precisely because of the point that Mr. Saylor has made. I would go along with that entirely. And it's not just the cryptocurrencies. I mean, if I look at Ether and Bitcoin from the 20th of March, which was the last business day before the Fed made its, we will do anything that's required. We will print 120 billion of QE monthly. That was on the 23rd. So the business day before, if you take the prices from there to today, Ether is up 761%. Bitcoin is up 459%. These two are the canary in the coal mine when it comes to the inflation of the fiat of the fiat currency.
Right. So because we have actual price discovery with Bitcoin, which we don't have in gold and we don't have anywhere else, what Bitcoin is telling us is that the US dollar right now is in a hyperinflationary collapse against hard money, that being Bitcoin. Yeah. Now, you mentioned Joe Biden there for a second. Let me ask you this. He won the 2 runoff seats in Georgia on the promise basically of $2,000 to every American plus a $7 trillion stimulus. And that doesn't sound very good for the dollar either.
I think it's just the continuation of what we've just been talking about over the last 3 or 4 minutes. It's precisely that. I mean, we have to accept that no politician actually has any option but to encourage the Fed to print to the point where the currency is destroyed. There is no other option.
The dollar index, which is widely quoted, I think the symbol is DXY. It's roughly trading around 80 or so. In your scenario, where does that go in the next few months?
Well, it obviously goes lower for the very simple reason that foreigners own something like 27 trillion of financial assets and deposits in the banks. So that is far too much for the current trading conditions. I mean, fine having an overweight position in the dollar if you believe it is rising, and furthermore, if you believe that trade is going to improve over the next year, 2 years, 3 years. But that is no longer the situation. So the foreigners are turning sellers of the dollar, which is what's happened so far, and they will continue to sell. But the real crash in the dollar is against commodities. And if you look at what the commodities done, I mean, it's been quite spectacular. I mean, I'm looking at lumber, that's up 170%. Silver is up 115%. Oil up 113%. I mean, these, when you get everything rising, it's not just sort of specific to each individual commodity. What it's telling us is the purchasing power of the dollar with respect to commodities, and we've already seen it with cryptocurrencies, is falling. Now, this is the beginning, if you like, of a collapse in the purchasing power of the dollar. Quite simple. And this is also reflected in equities, because a lot of the QE ends up going straight into financial assets without, sort of, if you like, non-interest bearing financial assets. Equities and things like that. And so consequently, I mean, we've seen NASDAQ up 81% since the beginning of last year. The S&P up 61.5%. So these are pretty strong numbers, all pointing in the same direction. And it is confirmed when you look at money supply. M1 money supply is up 54% last year. So, the evidence just piles up and piles up about what is going on. Now, I want to take you down another sort of rabbit hole, if you like, and that is quite how this is going to turn out, why it is turning out the way it is, and what the comparison in the past is. Now, the comparison to me, very, very clearly, is what John Law did in France in 1720. Basically, what he did was he printed money to ramp up financial asset prices. Now, at that time, the financial assets were the Mississippi Venture and his Banque Royale. What happened was that by doing that, he tied the future of his currency, the livre, to those financial assets. So when this puffing scheme began to fall over, guess what happened? The currency bit the dust. Now, this is exactly what the Fed and other central banks are doing today when it comes to their approach to QE. The whole idea is to try and create a wealth effect by puffing up markets so that, this way the whole economy sort of carries on and everybody's happy. It's exactly the same policy that John Law had, but on a global scale. He was a prototype Keynesian. And what are we doing? We're doing, if you like, the logical extent of Keynesian economics, which is basically to inflate. Whenever you've got a problem, inflate, inflate, inflate. And in this case, they've been inflating to puff up assets. When that fails, and it will fail, then the dollar goes down with it.
They just checked. The DXY is around 90. But you're saying that it's another one of these indices that are not giving any kind of good price signal. Actually, looking at commodities, you would get a much better price signal in terms of what's happening to the dollar. Certainly in Bitcoin, you're getting a price signal about what's happening to the dollar. The John Law incident in French history is remarkable. And on goldmoney.com website, there's a documentary starring me, Max Kaiser, and James Turk that actually explores John Law and the French collapse of their economy for those that are interested. Now, let me ask you this. Bretton Woods 2 and a great global reset are being talked about. Okay, so I don't think the policymakers around the world are ignorant of what you're saying here, that we're in a kind of a money printing death spiral and they need to take action. And it looks like a Bretton Woods type situation coming back. They have to benchmark these failing currencies against something. So I guess it's going to be gold, right? They're going to all come to the poker table and try to sort it out and who's got the gold and then recalibrate like they did in Bretton Woods Part 1, Alistair.
I think that is the end result. But there are two very big hurdles to overcome. Well, in fact, there are three. You cannot return to a gold standard or a gold exchange standard without addressing the budget deficits. You need to cut government spending in order to make it stick. Otherwise, in the case of America, her 8,100 tons of gold could actually disappear quite rapidly. The second point I would make about this is that everybody is a Keynesian in the central banks and in the US Treasury, for example, certainly in the Bank of England, that's very, very true. They are not going to give up on their Keynesian theories likely, and they will try and pursue them to the bitter end before they finally have to give in on turning their fiat currencies into, if you like, a mechanism whereby people can swap them for gold. That's the first thing. The second thing I would say, as far as the US is concerned, I think they have a problem that they would be very reluctant to give up their dollar hegemony because they see it as vital when it comes to the unspoken financial war against China and also Russia. If gold came back into play, they would see that this would hand enormous power to China and Russia. Russia isn't necessarily planning for a gold standard, but she could move there very, very quickly. China has a lot of undeclared gold, of that I'm very certain. And on top of that, her citizens also have a lot of gold, probably about 17,000 tons. So there is a wealth benefit, if you like, to the population from a return to a gold standard.
So you're talking about political gridlock there, because when they sit down to the Bretton Woods table, In order for some kind of gold standard to come back, all these countries are going to have to do a simultaneously joint debt jubilee, which you think would be politically impossible because they're wed to debt or Keynesianism, and they see debt and Keynesian as the modus operandi of their system. So they're not going to do that, number one. And number two, the U.S. government in its current position would not be willing to hand the ball to Russia and China, because effectively that's what would happen in a Bretton Woods II situation. So they end up with political gridlock, so nothing happens. We're going to take this to a second segment, Alistair. As usual, you're just too brilliant to contain in one segment. So I'll say goodbye now and talk to you very quickly. Thanks for being on Kaiser Report.
My pleasure.
And that's going to do it for this edition of Kaiser Report with me, Max Kaiser and Stacey Herbert. I want to thank our guest, Alistair McLeod of goldmoney.com. Until next time, bye, y'all.